Good morning, good morning. How you guys doing today? Glad you can join me for another day. We got a special one today. As many of you know, we had some data coming out Monday because of a holiday. In the States, the data did not come out on Friday. So instead it was delayed and it came out on this past Monday. But nevertheless, makes no difference. Even though it was delayed a few days, doesn't mean that, you know, the data is not important and we can't use it and it's not applicable. A lot of nonsense. Sometimes I hear people say, oh, the data comes out late. It was reported on Tuesday, comes out Friday. Why is it of any use? Well, it is of use. Major use. So we're going to go through the latest set of data because I think it's important, very important, and I think you will think so as well when you take a look at what the numbers are telling us. I'll also let you know that there was contracts expiring recently on the 18th, give or take around there, and this data was recorded on the 18th. So very interesting because as the information was being recorded, contracts were expiring. So what does this mean? Well, it usually means that the banks were in the process of making a shift in their positions. They have to make a decision whether they're going to keep as many longs as they have or as many shorts as they have into the new contract. And so what I've noticed over the years by studying the positions of the institutions, what I've noticed over the years is that contracts, when they expire, typically, not always, but typically they are times where the big institutions will reveal their hands to us because they're forced to make a move during that time, okay? They have to exit out of old contracts, get into new contracts. So we get to see how they use those contracts expiring, how they use them as a way to accelerate their longs or shorts or take profits on their positions, okay? So here is a snapshot of the positions as of the 18th. And what we can see is just by briefly looking at the change column, which is what I like to do, you can see in the change column we have some big numbers here, especially with pound. We see a big bearish shift. Now, if you've been following our work and you've been following the analysis that we've been doing, you'd know that the reason for this bearishness was because they needed to take profits on long positions. Remember, long positions were reaching really aggressive territory, maxed out size, so they needed to take profits on those positions. So they did that, which caused the bearish reaction in the market. And that's why you're seeing the change of negative 109,000. Euro followed suit to some degree with a negative 80,000. Big number. Big number. Bonds bearish as well. And we saw a slight drop in bonds during that period. S&P 500, slight bearishness. Okay, nothing major, slight bearishness. So that is basically a quick overview of the positions, but let me show you something else because it's all about context, putting things into context, right? All right, so if we take a look, here's my spreadsheet. I haven't completed it yet, but I'll do some transfer of data for you this morning so you can see what it is that I see as I'm compiling the information and placing it in the necessary areas. So one thing that really stuck out to me was the S&P 500. We've been tracking the S&P 500 for some time. Here is the spreadsheet on the S&P 500. Now I'm going to insert some data here. Okay. And I'm going to insert some short data here. Okay. And I'm going to do the same thing for commercials. And one more time, here we go. Now, take a look. What do you see here? When we take a look at the long column and we take a look at the short column, what do we see? We see that the institutions have increased their long positions, but they also just recently increased their shorts. Shorts increased from 381,000 to 429. Now again, if we look at the S&P, let's take a look here. S&P 500. This was the week of June 18. And if we take a look at June 18, we're looking at this big, tall candle to the upside. Okay. So this trading candle right here to the upside, right here, this data represents that. Okay. So you see the big increase in longs from 270,000 to 314. That's quite significant, but we also got a significant push up in short positions. The overall effect of everything, the net effect is a net positions went from negative 111,000 to negative 114,000. So if you were to just briefly look at this data, you'd think to yourself, they're bearish. They're bearish the stock market. But I wouldn't even be thinking about that at all. I wouldn't even be contemplating that, because at the end of the day, if you look at the charts, we're upward trending, period. Now, I've seen some wacky forecasts from people out there saying that the market's going to drop 70%. I mean, it's totally ridiculous. All right. Totally ridiculous. People can say whatever they want. I would ignore everybody. I would ignore everybody. And I do in my personal trading. I ignore everybody. But I like to see every once in a while what people are saying. Why? Because I want to see what they're trying to instigate. To say that the market's going to drop 70% from where it's at right now is just totally ridiculous. The banks are building uptrends. They're coming in with significant demand. They're coming in with significant buying, which we can locate on the charts, which we know exactly where it is. And we know that if price was to decline, they'd be declining into areas where the institutions were buying. So the odds are they will continue buying on those areas. So to say that the market's going to drop 70% is just utter nonsense, because there's absolutely zero proof for that. Okay, zero proof. We would need major institutional buying zones to be removed first, and major institutional selling zones to be put into place, and then we would be able to forecast where price is likely going to go. But to have upward trends and significant buying coming in from the banks and say that the market's going to drop 70%, that's based on zero. Okay, that forecast is based on nothing. Okay, anybody can just say, oh, it's going to drop 50%. But what are you basing that off? Where's the logic in that argument? And the thing is, it's illogical. The argument is illogical. So I would not be paying any attention to that. Okay, so the S&P is looking good. And like I said, the data is not the strongest. It's not making the strongest bullish argument. But regardless of what we're seeing here in terms of the data, it's still extremely strong, okay, based on the supply and demand that we can see on the charts. Let's look at the euro. So here's the numbers for the euro. Let's add here longs. So what did longs do? They took some profits on longs. And shorts, what did they do? They increase shorts. Okay, let's look at the commercials. Commercials, they took profits on longs and they took profits on shorts. So when I look at the long column, I can see numbers 188, 187, 171, taking profits on long positions, adding to shorts, right? And if we look at what has just been transpiring over the last few weeks, what do you see? Okay, a drop down in price. So that's your profit taking on long positions and adding to short positions. Now, does that mean that price is going to just continue to the downside from here? I wouldn't say that. And the reason why I wouldn't say that is because if you look at short positions, we've seen them increase shorts before, only to close them off. Increase shorts, only to close them off. Increase shorts, only to close them off. Now we're seeing the increase in shorts again. So far, to me, I don't see any proof that they're going to be opening up short positions and sustaining that over a few weeks or months. I don't see any sustainable move to the downside just yet. And the charts are telling me the same thing. We're getting a lot of upwards and downward movements, but nothing that, could be sustainable. If we look at the long column, we had some profit taking as a theme over several months. And over the last few weeks, we see profit taking again. But that's just a small handful of weeks in a large bucket that we're waiting to see play out. Okay. So on the euro, here's the situation. Like I said, we had a push to the downside on the weekly chart, as you can see. The latest drive down was right here. We called this move. We told you that up here in these highs, there was significant selling that was likely going to take place. All right. We had a short signal there, opened up a short trade. We had it pushed to the downside. I have targets a little bit lower here, which is the opposing area of demand. And so far, looking pretty good in terms of this short-term move to the downside. But once we hit demand, again, there's chances that we're going to see a push to the upside from here. The charts are not very clear, okay? I can tell you that right now. The supply and demand dynamics of what's taking place here are not very clear. Sure, we can catch these short-term moves when they come into play, but what's going to happen over the next several weeks, several months, it's hard to say. We have our biases and we share that with students, but when we want to have a solid conviction on price direction, we want multiple pieces of information to come together to corroborate one picture. Okay. So, if we were thinking that longer term, the euro was going to be dropping, we'd want to see some evidence to support that with the CFTC data. We'd want to see that the banks are increasing short positions in a sustainable fashion, that they're taking profits on long positions in a sustainable fashion. And that would give us a more solid commitment to entering into positions to the downside. But as we are seeing right now, when we look at the multiple time frames, it's very difficult to determine price direction. And again, looking at CFTC data, there's nothing sustainable here. Okay. One indicator that I always pay attention to is I look at my long and short column. Okay. Because this takes into consideration the positions that the institutions have, the percentage of their overall positions. Are they long or are they short? Okay. And depending on what their positions have been in the recent past, the coloration of the cells gives us an indication of whether or not, based on their current positions, whether or not they're bullish, bearish, or they're neutral. Okay. And that's very important. Very important to know, because take a look at what the coloration of the cells are here. Okay. They're more of a blue than anything else, which means their positions are neutral. Okay. Their positions are neutral. 51% long, 49% short. Obviously, that's neutral. But the way that the template is, the way that my spreadsheet is coded, we could be 60% long and still be neutral. Okay. It always depends on what they have been, how they've been situated with their positions in the past. And this gives us our indication of what they are currently at the time. So right now, we know that the banks are neutral with their positions on the euro. And that explains a lot of this type of price action and why price is coming in with selling and then all of a sudden coming in with buying and then coming in with selling and then coming in with buying on the same time frame. Okay, which is, it happens. This is the ranging situation. This is what happens when price is ranging. So we're waiting for smaller time frames to come in with supply and continue to come in with supply and then produce downward structures, okay, to facilitate supply being created on higher time frames to facilitate downward structures being created on higher time frames and so forth. Once we get that type of situation, then we know that the odds are shorts are the way to go. Okay, so that's the S&P, that's the euro. Let's look back here. So let's take a quick look at pound, because as I was saying, they needed to take profits on their positions. So let's take a look. They were 110,000 on pound, now 105. Okay, so there's your beginning stages of profit taking on long positions. So this is what I was mentioning to you before about. Okay, look at commercials. We plot that data there, and we can see a big change, big shift in shorts. Why? Well, contracts were expiring. So sometimes they're not able to fill in all the contracts that they wanted to fill in before reporting the data to the CFTC. And so we get big discrepancies in data such as that. But in terms of non-commercial, it looks like they got their positions filled. From 110 to 105,000, that's profit taking on long positions. And this is exactly what I was talking about, which is what fueled that move to the downside here in the market, okay, is the profit taking on those positions. So that's pretty much it. Look at the coloration here. This is interesting. Look at the coloration here. When we look at long and shorts, look at the coloration. What do you see? Recently, April, May, they were neutral. And now what do we see? Bullish. But remember, we just finished seeing them increasing a massive amount of long positions. So you'd expect it to be bullish at this time. Bullish cycle, okay? Bullish cycle, but distribution within bullish cycle, okay? They're offloading those long positions within a bullish cycle. So not the time for us to be getting into long positions. We wait and see what they want to do after they take profits on those long positions. Okay? And I think those are the two of the main ones. Let's take a look at US dollar, Japanese yen before we end the session, because this one's been a big mover. Not too long ago, we did a session on euro yen pairs. You guys should check that out, because we did some really good investigating on the yen pairs, and we discovered some interesting things that are now taking place in these markets. So go through my my YouTube feed and take a look at that. So let's look at US dollar, Japanese yen. What do we see here over the last few months? We saw them profit taking on long positions, and then 161, 173, 184, 172, 169, 177. They took profits on long positions and slowly have added some, taken some off, added some, taken some off. Are they focused on shorts right now? 0%, okay? Not focused. Look at the coloration of the cells. They're very cooled off. The coloration of the cells for shorts are blue, which means they're cooled off, which means they're not really focused on those at this time. What they're focusing on are longs. They took profits, but it hasn't been a steady profit taking where the numbers keep on dwindling to, you know, lower and lower and lower each week. They dwindled for a few weeks and they added some back. And then they dwindled and they added some back. So the main focus has still been on longs. And so look at this coloration of the cells here. Clearly bullish. Clearly bullish, all right? And when we take a look at the charts, what do we see? Price continues to increase, continues to rally, all right? We had demand that came into play. We had this demand zone drawn out, if you would remember, down here. Price dropped down to that 151 area, and it's been upwards like a rocket ever since, okay? They create another area of demand here, and it's been upwards like a rocket ever since. Last area of demand was here, 157, and it's been nothing but upwards momentum ever since. So, you know, we were looking at some of the euro pairs, and they were giving us evidence that price was going to continue higher because we are seeing certain areas of supply being removed, which were the indication to us that likely we were going to see continued strength on yen pairs. All right, so there you go. I'll leave you with that. That's a lot to digest, I think. Good way to start the week again. It's our first session together since last week, so I hope you enjoyed it. I'm going to continue working and analyzing the CFTC data, the latest set, and I'll be posting some updates on the Telegram channel, so if you haven't made it to our Telegram channel, you should. There's a link on the bottom of our website at whiteoakfx.com. You should join us there because you get a lot of exclusive analysis posted on there, especially to do with currencies, stocks, indexes. A lot of stuff is posted on there. Also on our Twitter or X, whatever you want to call it. We post a lot on there. And then you get some really exclusive stuff with our newsletter. So if you haven't joined, whiteoakfx.com. There's a link at the bottom of the page to join our newsletter. We'd love to have you. Come and join us, learn something new about the markets, all right? You take care of yourself, and we'll see you.